Hi, welcome back to the channel. This video is another update on the situation with Russia. There are so many different financial implications of the conflict that's going on in Ukraine right now, and it's difficult really to prioritize exactly what to talk about. So if you've been following the channel, you'll know that I've posted a variety of videos talking about the banks, the potential for a recession, what might happen with regards to energy prices. And in today's video, I wanted to talk about a variety of different topics. The first thing I'm going to cover is a new bankruptcy law that's been brought in Russia. And one of the things we've been discussing over the last few videos is the withdrawal of Western companies from Russia. So a lot of big multinationals have operations in Russia, and the oil companies are probably the biggest ones. And some of those companies have come out and announced that they are now exiting from Russia entirely. And the question really remains as to how do you go about doing that? If you've invested billions of dollars building up a business, building up infrastructure, hiring people, putting all of the systems in place for that business to be able to operate in the global economy, how do you just walk away from it? How do you actually do that without just destroying all of the value that you've built up? And the new bankruptcy law that's just been introduced in Russia gives us part of an answer to that. So we'll go through the details on that at the start of this video. I'll then talk about the stock exchanges, what's happening in the global stock exchanges. Now, all of the stock exchanges around the world have been affected, but the two biggest ones that have been affected are the Russian stock exchange, clearly, and the European stock exchanges. There has been a lot of impact elsewhere, but they're the main two that have felt the brunt of this conflict. So we'll go through some detail as to what's going on, what stocks have been suspended, how overseas companies actually go about listing their business on an overseas stock exchange. I'll give you some detail on that because I think it's quite interesting to understand how it works. And then we'll go on to have a look at some of the fund managers' exposure to Russia and the wider environment, because a lot of these fund managers are sitting with our pension money. They've got all of our cash. They're officially the managers of this cash, but we own it. It's our money. And so I wanted to go through who's exposed to Russia, how much they're exposed, and how that's likely to play out over the next 3 to 6 months. I'll quickly mention what's happening with regards to the gas pipelines that are in place between Russia and the rest of Europe. And Russia's really important part of the supply chain in Europe. It provides around about 40% of natural gas, which is used to produce electricity. So we'll go through what's happening with that. And finally, as a little bit of light relief to try to lift the mood a little bit, I'll give you a quick update as to what's happening with Airbnb. So before we get into all of that, if you could give me a thumbs up at some point during this video, if you're enjoying the content, I'd really appreciate that. And I'd also appreciate it if you could subscribe if you haven't done so already. I've got a target. I'm trying to get to 100,000 subscribers. It's a big ask. I'm only on around about 30,000 at the moment. So 100,000 is a long way from where I am today. But it would be great because you get one of those lovely YouTube buttons sent to you. So I'll be able to stick that in the corner instead of the stick man on stilts at the moment. The Russian authorities have just announced that they've introduced a fast track bankruptcy program in Russia for any companies that are looking to exit from their facilities. The Russian government has posted a statement on Telegram. And just as an aside, before I show you that statement, Telegram, if you're not familiar with it, is very similar to WhatsApp. It's an interchange system where people can exchange real-time messaging and share documents and those sort of things. So just in case you're not familiar with Telegram, it's nothing to do with the old-fashioned telegrams where people used to have printouts of certain messages and then somebody would come and deliver it to your front door. It's entirely different to that. And the statement says, the Fast Track Bankruptcy Plan will support the employment and social well-being of citizens so that bona fide entrepreneurs can ensure the effective functioning of business. So what the Russian authorities are doing here is that they're trying to protect all of these businesses that have been created by overseas companies. They don't want all of this business to be left to go to rack and ruin and just collapse. They want all of the existing people within Russia to be able to take on all of these enterprises. So this is quite a smart scheme by the Russian authorities, because what it's doing is effectively saying to all of these overseas companies, if you want to walk away from Russia, if you want to wash your hands of everything that you've built, that's fine. we've got a really quick process here. You do that, and we will then take over your business for free, for zero value, and then we will carry on from where it is today. So what essentially this is doing is handing over control and ownership of all of this infrastructure that's been built up over the last 30 years or so in Russia directly to the employees and the state. So Russia is looking to protect the business interests, and it's given an easy out to all of these companies that have stated that they no longer want to deal with Russia. So this is still disastrous news for the global economy in terms of the level of investments that have been put in by people like BP and Shell. And we talked about the banks yesterday who've built up networks within Russia. If these companies are committed to walking away from those investments, then they now have a very easy and quick way of doing this. They could do this within a matter of days. But the question is, will they actually follow through on all of these statements? Because obviously right now we're in the middle of the conflict and the atrocities that are going on. So everybody wants to distance themselves from Russia. But when you look at the business side of things, there is a lot of time and money and energy that's gone into creating these companies. So it will be interesting to see whether or not every single company follows through and fully exits from Russia, or whether we see some sort of compromise or some sort of other middle ground. But the Russian authorities have certainly stepped up to the mark. They've given all of these companies now the option of saying, let's go for a quick bankruptcy, give us your business, and we'll carry on from where we are today. Thank you very much. Stock exchanges all around the world have been falling in value since the invasion of Ukraine started. And this has been driven predominantly because of the geopolitical risks. The markets are always very nervous when there's signs of war, because if it escalates and more countries get drawn in, then that will clearly have a damaging effect on the global economy. But there's also some specific factors. And a number of Russian firms have their shares traded on overseas stock exchanges. And the European markets are the ones where there are the most companies trading, but there's also some Russian firms that do trade their stock in New York. So a couple of examples of companies that are traded in New York are Yandex, the internet search business, and Ozon, which is an e-commerce business. Now, the shares in Russian businesses have been dropping like a stone over the last week. Nobody wants to invest in a Russian company. Nobody's sure what's going to happen. There's a risk that these shares could be banned from trading outside of Russia. So nobody is putting any money into Russian stock right now. And all of the shares in Russian businesses have now been suspended. So in London, we've got 27 companies that were identified as Russian entities, and they are all now suspended. But whilst we're on the topic of Russian company shares being traded on overseas bourses, I wanted to give you a very quick overview as to how that actually operates. So this is what's known as the depository receipt system. And you may have heard of this. In America, it's called American Depository Receipts. And in the rest of the world, it's Global Depository Receipts. So the way this operates in practice is that a firm like Gazprom, which is the largest business in Russia and has a market cap of over $30 billion, it issues its shares in Russia, but it also wants to access the capital markets in other countries. So in order to access the capital markets in America, the way that it does that, the company goes and talks to a major bank. It might be Citibank, for example, and they deposit a large amount of shares with Citibank, and then Citibank issue the depository receipts. And these are then traded in the same way as shares, although they're not actually shares in Gazprom. So if you're buying what's known as an American depository receipt in the USA, that's not actually a share in Gazprom. That's actually something that's been issued by Citibank, but it's backed by the shares from Gazprom. So it's essentially like a guarantee from the bank that they're holding the shares, and they give you a piece of paper, which is like a share in the company, but you don't have the same rights, you don't have the same voting positions, so it's slightly different arrangement. But what it does, it enables you as an investor to take a stake in that business through this relatively complicated system. And in Europe, all of the Russian businesses are trading on what's known as global depository receipts, and it works in exactly the same way. The shares are deposited with somebody like Deutsche Bank in Germany, and then Deutsche Bank will issue those depository receipts, and that's what's traded on the markets. So as you're probably aware, all of the sanctions that have been brought in are designed to prevent all of the major companies in Russia that have been identified as potentially having links to either the government or to funding military from not having access to any of the capital markets. So all of these American depository receipts and global depository receipts for all the Russian companies have now been suspended from trading. They were falling in value dramatically as the conflict started to build up, but they've now all been suspended. So it's going to be really interesting when at some point in the future the markets do open, what happens to the price of these depository receipts, whether or not they fall into such a level that there'll be a bounce back or whether they'll be completely worthless. And I guess it's going to depend a little bit on legislation and what additional sanctions are brought in at the end of this conflict, assuming we do get an end to what's going on in Ukraine. One final point to note is that the Moscow Stock Exchange has been completely suspended for the last week or so. So no trading is allowed, and no overseas entities are allowed to sell their shareholding in Russian businesses, because the Russian authorities know that it's a seller's market. Everybody wants out at the moment, so there would be no buyers and that market would collapse. So they've suspended it, and it's likely to stay suspended until we get some form of resolution as to what's going on. So on the issue of stocks, I wanted to talk about the fund managers and their exposure to Russia. So this is a very unusual situation. Normally, if a fund manager has exposure to a certain sector or a certain country, and something happens to reduce the attractiveness of these investments, then it would look to start exiting from all of its positions. But because all of the markets have been suspended and the shares in Russian businesses have been suspended, nobody can actually exit from their position. So the fund managers are sitting in a very vulnerable situation right now because they can't get out of what they've invested into and they can't mark to market the value. So normally they'd be able to benchmark the price and to provide people with an update as to what those holdings are worth. Because everything's suspended, there is no price at the moment. So it's very difficult to actually put a value on that. So I wanted to go through who's got exposure to Russia and what it looks like. Now, it's very difficult to get exact figures because the exposure to Russia isn't just a metric that you can pull down. You can't just say how much does everybody have directly related to Russia, because there's all the interconnectivity. So we've talked about it a lot on this channel. Russia is clearly very closely aligned to the energy markets. It's one of the biggest producers of energy, so it sells oil and natural gas and coal all around the world. So it's not just the businesses that are listed that have those values, it's all of the interrelated companies that have a relationship with the price of energy and food and so on and so forth. So it's a really difficult question to answer, but I have got some statistics to show you. And the reason I wanted to throw up these numbers is that, as I mentioned at the start of the video, a lot of the money that these guys are managing is your money and my money. It's from our pension funds and maybe some investment funds we've got and some other assets that maybe we've been investing into. So fund managers are exactly what it says on the tin. They manage somebody else's fund. They don't own the money. They're supposed to be experts. They're the ones making the decisions, but it's not their money. They take fees and take bonuses and all that good stuff, but it's our money. And so that's why I'm talking about the fund managers, because it's important to everybody who's watching this channel, because it could be your pension that's invested into Russia or related assets. So I wanted to highlight the names of the companies that have the biggest exposure. And what I'll do, I've got two sets of statistics to show you. The first is the actual funds that have the biggest exposure to Russia. And then we've got the fund managers. So the top 10 funds with direct exposure to Russia. So this is equity or bonds that have been issued by Russian businesses. So the top 3 funds with exposure are Invesco, PIMCO and Vanguard Total International Stock, all of whom have $3.6 billion of exposure. We've then got Vanguard Emerging Markets, Capital Group's American Funds Capital World Growth and Income Fund with $2 billion, PIMCO GIS Income Fund with 1.8 billion, Goldman Sachs GQG Partners International Opportunities Fund 1.7, Capital Group American Fund 1.7, Fidelity 1.7, and iShares 1.5. Now, the asset managers with the biggest exposure have slightly bigger figures because they are investing across a number of different funds. So Capital Group is the manager who has the biggest single exposure to Russia. They've got around about 8 billion declared. Vanguard is a close second with 7.8 billion. PIMCO's coming in at 6 billion. BlackRock have over 5 billion of exposure, and Fidelity has about 4.5 billion. So I just wanted to touch briefly on the gas pipeline situation. As you'll know if you follow the channel, Russia has 10 major pipelines that supply natural gas directly from its fields in Russia straight to all of the countries in Europe who are buying gas from them. And a number of countries have a high dependency on this natural gas. So Turkey is probably the most exposed. They produce over a quarter of all of their electricity from natural gas provided by Russia, but there's also a big dependency in Germany and Italy. And one of the concerns for Joe Biden in recent times was that this provides leverage for Russia over these countries, because if they switch off the supply of this natural gas, then that would cause major problems in all of those countries because they have natural gas power stations set up. So you can't just switch those stations to use oil or coal to produce electricity. It doesn't work like that. So they need to have natural gas. So if they stop receiving the supplies from Russia, the only other alternative would be to buy liquefied natural gas, which is when gas is reduced in temperature and turned into a liquid. And obviously then you can store it in facilities, and then you can convert it back into its gas form and use that in your power stations. But the problem with liquefied natural gas is it's a lot more expensive. Obviously, you have to cool the gas to supercool temperatures, and then you have to store it at those temperatures, and then you have to release it under controlled environments. So there's a lot of cost involved in doing all of that. So the gas pipelines from Russia to Europe are a really important part of the infrastructure of Europe. And it was recently reported that there was an explosion on one of the pipelines in Ukraine. A stray missile had caught a pipeline. We don't have any update on that at all. The Russian authorities haven't released any information, and we don't know which of the pipelines was hit. But one thing I can tell you is the Yamal pipeline, which delivers directly to Poland and Germany, stopped delivering gas on Friday, has currently stopped delivering gas. Now, this pipeline supplies around about 15% of all of Russia's pipeline gas. So it's one of the biggest pipelines, and there's no official statements as to why this supply has stopped. Russia's official line on this is that they will continue supplying all of the countries in Europe with all of their gas, and it's a completely separate discussion from what's happening in Ukraine. But as it stands right now, that pipeline is not delivering the gas. So I'll keep you posted on any further news and developments. This may just be a temporary blip. There might be a real reason as to why the gas has stopped flowing. But one of the concerns in Europe here is that Russia could use its position as the major supplier of natural gas to cause more problems and to retaliate in terms of the sanctions that are being imposed against it. And finally today, I just wanted to let you know that Airbnb have just announced that they're no longer taking any active bookings in Russia or Belarus. So I'm not sure what your plans were for the weekend, or whether you're thinking about going on holiday over the next few weeks and you quite fancied a break in Moscow or some other part of Russia, but unfortunately that's not going to be possible this year. Now clearly I'm being a little bit frivolous here, and Airbnb are just following the same course as all of the other Western countries and announcing that they're no longer doing any business in Russia. But I thought it was moderately amusing. I'm not trying to make light of what's going on in Ukraine, but it just struck me as mildly amusing that Airbnb are now stopping all bookings in Russia, because I'm sure they've got zero demand for any bookings in Russia now and possibly for the foreseeable future. But hopefully that's brought a small smile to your face in what otherwise is a set of fairly depressing news that I'm bringing you in this video. So what's the summary and conclusion today? Well, clearly, the impact of the invasion of Ukraine by Russia is still being felt all around the world. The stock markets are generally closed to anything that's Russian related, and the markets in Russia are entirely closed. And we're starting to see a pattern now that everybody is having to announce their exposure to Russia and what their potential losses are. So the fund managers have listed their direct exposure to Russia, but that doesn't take into account the impact on all companies around the world. So BP and Shell, as examples, are not included in those list of figures that have been shown by the fund managers, but clearly the impact on those businesses is quite large. It will reduce their share price, and therefore any fund that's invested in BP or Shell is going to see a reduction in its value. And that's going to play out all across the board. We're going to see hundreds and thousands of companies impacted indirectly by this crisis. So it's bringing down the value of investments all around the world. And it's really interesting to see that the Russian authorities have brought in this fast track bankruptcy because clearly they don't want their own companies to be impacted. So they're essentially saying, if you want to pull out of Russia, go. We will take your assets. We will own them for free. We're not going to give you any value for that. And there's also the potential that we may see investment coming from China. They may fill the gap left by the Western world because a lot of these Russian businesses are very profitable and are very viable entities going forward. So the oil and gas and coal businesses will throw off a lot of profit and a lot of cash, and also they're highly valuable resources. So I think there's a high likelihood that we could see a lot of investment moving from China into Russia over the next 3 to 6 months as we see the Western companies exit from their Russian investments. So as soon as there's any news or developments on that front or anything else related to the financial world that's linked to what's going on in Ukraine, I'll let you know. Hopefully you've enjoyed this video today. If you did, then please give me a thumbs up and don't forget to subscribe if you haven't done so already.